The unthinkable has happened. Donald Trump has returned to the White House, and within days, the US economy is spiraling into uncertainty. The stock market is in free fall, businesses are panicking, and economists are scrambling to make sense of the chaos. Wall Street had already been on edge leading up to the election, but now, fears of a full-scale recession are gripping the nation. The question is this just a temporary shock, or are we on the verge of an economic meltdown? Just hours after Trump's victory was confirmed, the markets reacted violently. The Dow Jones plunged over 1,200 points in a single trading session, marking its worst post-election performance in history. Investors fled to safer assets, driving up the price of gold while government bonds surged. The uncertainty of Trump's return to power, combined with his aggressive economic policies, has sent shockwaves through the financial world. But why is this happening? And more importantly, how bad could things get? One of the biggest triggers for this economic panic is Trump's plan to reinstate and expand tariffs on Chinese and European imports. During his first term, Trump launched a massive trade war with China, slapping tariffs on hundreds of billions of dollars worth of goods. Now, he's doubling down. His administration has already announced new tariffs on everything from electronics to automobiles, and China has responded with its own retaliatory measures. The result? Rising costs for American businesses and consumers. Tariffs act like a tax on imports, meaning companies that rely on foreign materials will either have to absorb the extra costs or pass them on to consumers. This means higher prices for everyday goods, from smartphones to washing machines to groceries. Inflation, which had finally started cooling off, is now at risk of surging again. The Federal Reserve had been cautiously considering interest rate cuts. But with Trump's new policies threatening to drive inflation back up, the Fed may have no choice but to keep rates higher for longer, making borrowing more expensive for businesses and homeowners alike. And it's not just trade policies causing concern. Trump's tax cuts were one of the defining features of his first presidency, and he's already promised another round of major tax reductions. While that might sound like good news on the surface, economists warn that further tax cuts, especially without reductions in government spending, could explode the national debt. The US deficit is already at record levels, and slashing taxes while increasing spending on military and infrastructure could send the federal debt spiraling out of control. If international investors lose confidence in America's ability to manage its finances, the consequences could be catastrophic. At the same time, Wall Street is bracing for a regulatory storm. Trump's administration is expected to roll back financial regulations, making it easier for corporations to operate with fewer restrictions. Supporters argue this will boost economic growth, but critics warn that deregulation could lead to reckless financial behavior, similar to what happened before the 2008 financial crisis. Could history be repeating itself? Then there's the job market. Before Trump took office, unemployment was near record lows. But now, businesses are worried about labor shortages, wage pressures, and automation replacing workers. While Trump has promised to bring back manufacturing jobs and push for more America First policies, economists warn that global supply chains can't simply be reversed overnight. If companies start struggling to keep up with rising costs, we could see mass layoffs and hiring freezes across multiple industries. And let's not forget the housing market. Over the past few years, home prices soared to historic highs, driven by a combination of low interest rates and housing shortages. Now, with interest rates remaining high and inflation fears resurfacing, mortgage rates are climbing once again, putting home ownership out of reach for many Americans. Real estate experts are warning that we could be headed for a severe housing downturn, especially if consumer confidence starts to collapse. Small businesses, the backbone of the American economy, are also feeling the heat. With higher tariffs, more expensive borrowing, and unpredictable trade policies, small business owners are unsure whether they can survive another turbulent 4 years. Many are already reporting tighter profit margins and difficulties securing loans due to high interest rates. If lending tightens further, we could see a wave of bankruptcies hitting small and mid-sized businesses, which would send unemployment soaring. And then there's the geopolitical factor. Trump's foreign policy has always been unpredictable, and tensions with China, Russia, and even US allies could further rattle the economy. If international trade partners lose trust in the US economy, we could see capital flight, where investors pull their money out of American markets and move it elsewhere. That would put even more pressure on the stock market and the US dollar. So, are we actually headed for a recession? That depends on who you ask. Some economists believe that Trump's policies could boost short-term economic growth by lowering taxes and reducing regulations, which could lead to a brief economic boom. However, many experts warn that this boost would be unsustainable and that the combination of rising debt, trade wars, inflation, and financial deregulation could create the perfect storm for a major downturn. The biggest question now is how the Federal Reserve will respond. The Fed had been planning for rate cuts, but now they are caught in a dilemma. If inflation starts rising again due to tariffs, they may be forced to keep interest rates high or even raise them further. But that would make borrowing even more expensive, potentially triggering a full-blown economic contraction. The stock market is already showing signs of distress, and if investor confidence continues to erode, we could see one of the sharpest economic downturns in modern history. And what does this mean for the average American? It means more expensive groceries, higher mortgage rates, increased credit card interest, and potential job instability. The cost of living crisis could deepen, making it harder for families to keep up with everyday expenses. For those with investments or retirement accounts, the roller coaster ride in the stock market could wipe out significant wealth. But is there a way out? Some analysts argue that if the administration can strike better trade deals quickly, stabilize inflation, and avoid excessive deregulation, the economy could recover faster than expected. However, with Trump's unpredictable leadership style, businesses and investors remain on edge, unsure of what comes next. The truth is, no one knows exactly how this will play out. But one thing is clear: the economy is at a tipping point. If things continue on their current trajectory, we could be looking at one of the most volatile economic periods in modern US history. So, what do you think? Is the US on the brink of a recession, or is this just another cycle of market correction? And will the US be able to thrive efficiently under Trump's presidency? Drop your thoughts in the comments below. Also, let us know what other type of content would you like to see in the future. And if you want to stay ahead of the financial chaos and found this video informative, make sure to drop a like and hit that subscribe button with notifications on. Because who knows? Maybe in the coming months, the economy might just be the biggest story in America.